All right, well, my next guest is a well-known businessman and author and is one of America's top publishers. He's the editor-in-chief of business magazine Forbes, as well as president and CEO of its publisher, Forbes Incorporated. He was a Republican candidate in the United States presidential primaries in 1996 and in 2000. His name is Steve Forbes. Steve, it's an absolute honor to have you on Follow the Money Weekly this week.
We're looking forward to it. Thank you.
Steve, you have been rather outspoken this year regarding the midterm elections. So far this year, by my count, you have endorsed about 8 Republican nominees for the U.S. House and Senate, including Republican Senate candidate Peter Schiff from Connecticut and Dr. Rand Paul, the Republican Senate candidate from Kentucky, who also happens to be the son of U.S. Representative Ron Paul. Steve, what are your expectations from these midterm elections, and how hopeful are you that real change can be implemented through what appears to be a new breed of Republican candidates?
Well, I do think the Republicans will take both the House and the Senate, and I think a lot of the new Republicans coming in have a real sense of a real agenda, have real principles, and are not going to fall to the vapors that some of their predecessors did in Washington. So you mentioned Rand Paul. I think there's going to be a renewed emphasis on stabilizing the dollar. Other candidates are going to be pushing to repeal Obamacare and replace it with true free markets. And on the spending side, I think there's unity that we've got to cut back this binge spending and keep first the tax cuts in place of 2003 and then move to genuinely simplify the tax code so the American people can focus on being productive instead of trying to find ways around all the rocks being pelted at them from politicians and the tax collectors.
Steve, you mentioned the size of the federal government. It's become outrageous over the last several decades. The federal government is in the retirement business, it's in the education business, and now through the new Obamacare legislation, it wants to expand its role in the healthcare business. All of this talk about government-run healthcare has been confusing to many, and you brought up a great question on page 240 of your recent book, How Capitalism Will Save Us. You asked the question, and I think it cuts to the quick of the whole matter. The question was this: is affordable health care possible in the free market? The Democrats say no, and their obvious solution is Obamacare. What say you on the matter?
The only way you get affordable health care and more health care, increasing the supply of health care, is through free markets. As you know, we don't have a real free market system in health care. It's a mixed system, hybrid system that grew out of World War II, price controls from World War II. And so you have pockets of free enterprise. For example, we are still leading the world in terms of innovations and new medicines, new drugs, new medical devices. We do more than the rest of the world put together. But we still have a lot of this semi-socialism in healthcare. And so the real answer is to get free enterprise in healthcare and do to healthcare what we do with food. You know, because people may have problems getting food doesn't mean the government should run the farms. We tried that with Russia and China. It did not work very well. So we allow the farmers to grow the food, private companies to process the food, truckers and others deliver the food, grocery stores, restaurants sell the food. And if people can't get it, we have everything from food stamps to food banks to deal with it. Why can't we do the same thing in healthcare? Have genuine free enterprise and make sure there's a safety net for those who can't get it.
You know, do you feel that the new political awakening that's occurring around the country through the Tea Party movement and other type of movements are creating an environment that is conducive to change the federal tax code? You brought that up a while ago about the federal tax code. Do you think that changes to the system are possible as we move forward? Are you becoming more hopeless over time?
The answer is yes. We're going to have a tough couple of years. The president, I think, is going to dig in his heels and try to fight these things. But I think we can lay the foundations for a big change in 2012, and I think the mood of the American people will be we have to do positive things to get this economy back on track again, and one of them would be getting rid of this beast of a tax code, replacing it with a flat tax with generous exemptions for kids and for adults, and so you can fill out your tax return on a single page. After all, 26 countries have done it. So, yes, I'm optimistic on that, and one of the things I'm sort of fantasizing with this new Congress is that they'd be bold enough to pass something like the flat tax, let the president veto it, and then make it an issue in 2012.
Steve, let's move to Social Security for a minute. One of the major concerns of American workers today is that perceived inability of the Social Security system to remain solvent into their retirement years. Younger workers especially sensitive to this because the economic forecasts and projections, they look very bleak. Nonetheless, they have to continue because they have no option. They have to continue paying the bill for current retirees. Now that there's been quite a bit of talk about the need to overhaul the Social Security system as of late, what is your opinion? What needs to be done at the federal level to ensure that Social Security does not become an albatross on the back of younger workers as we head into the future?
Well, I think we have enough wealth as a nation, particularly when we get our economy back on track, to pay the benefits for those who are on the system and about to go on the system. But you're right, younger people, the system is a disaster. So why not do what is right? And that is allow these people, the younger people, to have their own personal retirement accounts, sensible rules on diversification and the like. So that way the money belongs to them, not the Washington politicians. It turns Social Security from a liability into an asset, capital creator for the country. It's win-win all around.
Let's talk about the economic crisis for a minute, Steve. You know, there's been a lot of discussion regarding the root causes of the crisis. Some have blamed greed. I've had guests on that have talked about predatory capitalism. In essence, just like the 1930s, the current financial crisis has caused our leaders to question the free market. What do you say to those who think that the free markets are to blame for America's economic crisis?
Well, that's the amazing thing. If you look, and we discussed this in our book, How Capitalism Will Save Us, is that all of the major economic crises of the past 100 years have had as their origins massive government policy mistakes and errors. And yet it is free markets that get the rap for it. In the 1930s, we had the massive Hoots-Smalley tariff, huge increases on taxes, destroyed the global trading system. We had huge tax increases. For example, the income tax rate was raised from 25% high to 63%. They even put excise taxes on people who wrote checks. And so those were government mistakes. In the 70s, the Federal Reserve goes on a bender on printing too much money. But yet free markets get the blame. And in this one, again, the Fed, I think, was the big villain, printing too much money. You know, we could not have had a housing bubble the size we did, or at all, if the Fed hadn't printed so much money. The juice wouldn't have been there for it. And you know, Fannie and Freddie, those are government creations too. And they guaranteed over $1.7 trillion of junk mortgages. So, but yet free enterprise gets the rap. You know, saying greed caused the crisis is about as helpful as saying gravity causes airplane crashes. Not very helpful.
That's a good point. That's a very good point. The dollar itself is just continuing to get hammered, Steve. In the last 3 months, it's lost almost 8% of its value. Most of those losses have occurred in just the last few weeks. What's happening at the Treasury? What's happening at the Fed that they are willing to allow our currency to be trashed in value like they have over the last several years? What happened to the old strong dollar policy, Steve?
Well, they have this erroneous policy based on faulty economics that when you trash your currency, that somehow makes you richer. You know, your exports will go up. They ignore the inflation that you bring in, which hurts the economy. You know, if crashing your money was the way to wealth, Zimbabwe and Argentina would own the world today. And so it's a very destructive policy. It's like saying, well, if we change the number of inches in a foot, we can increase your height. No, you can't.
On page 177 of your book, A New Birth of Freedom, which was published, by the way, back in 1999, you stated, and I quote, "It's time to link the value of our money to something stable and secure like the price of gold. That will ensure that the Fed does not inadvertently put its thumb on the world's windpipe, causing global currency turbulence." Steve, many Americans are just now waking up to the fact that the U.S. dollar has no intrinsic value, that it's no longer backed up by gold or silver. Is what you proposed in 1999, is a type of gold-linked dollar the answer to the Fed's out-of-control money printing? And if so, how would that work?
Well, it's the only answer. And I think I'll make a prediction. I think in the next 5 years, we are going to have a new link to gold. You can do a modernized version of it. I'm picking a number now, say $1,000 an ounce. And everyone knows if it goes above, say, for a period of time, $1,020, or goes below, say, $980, the Fed will either, if it goes above goes much above 1,000 for a while, everyone knows the Fed's going to tighten. If it starts to go below 1,000 for a while, everyone knows the Fed's going to ease. Keep it within a narrow range around $1,000 an ounce. and then that will bring stability. It's a matter of discipline, having a target, and the discipline to meet that target.
What do you think about the price of gold right now? Are you worried about how quickly it looks parabolic on a chart? What do you think about gold right now?
Well, gold is going up in anticipation of what the Fed and the Treasury have made quite clear, and that is they're going to trash the dollar, devalue the dollar. So markets don't wait for something to happen. If you see a tornado coming, you don't wait for it to hit before deciding to go into the basement. you do it before it hits. So a lot of the price of gold is anticipation of bad things to come, and the government's going out of its way to make those bad things to come. So gold should be seen as an insurance policy. Its intrinsic value does not change. When you get different prices, that's currencies are either strengthening or weakening.
Speaking of bad things to come, the chief economist over at Goldman Sachs recently stated that over the next 6 to 9 months, the U.S. economy is either going to be bad or very bad. Do you agree?
I think the economy is in the equivalent of what you might call bad flu, walking pneumonia. We will gurgle ahead, but it's a low-gear economy, and they're going to play games, I'm afraid, this Congress with the tax cuts at the end of this year, beginning of next year. That's going to create more uncertainty. Mm-hmm. So it's like a football team that's capable of winning the Super Bowl but can barely win one-third of its games. You win one once in a while, but it's not going to get you very far.
Mm-mm. Well, given the current situation, Steve, many of our listeners are seeking to preserve capital. They're seeking to protect their financial assets. What's your general? I know you're not a financial advisor, but what's your general advice to those who are seeking to protect their financial assets?
Well, you should have a certain amount of gold just as an insurance policy. Don't see it as an investment. See it as an insurance policy, so that when the politicians go off the rails, as they've done, the central bankers have done, at least you got something to protect yourself. But I think what the key for investors is to have a disciplined approach. If you, dollar cost averaging works. Investing a certain amount of money each month in several mutual funds and the like works. The key thing is doing it in good times and bad times. The problem is, in bad times, the tendency is to flee the markets, and so then you miss the upside. So be honest with yourself. What's your appetite for risk? What can you truly set aside that you're not going to need right away? And then put it to work. Because the thing to keep in mind in all of this is America's going to come back. You're going to start to see it in the elections. The American people know that what is happening is profoundly wrong. And I think we're going to start to see happening in our country after another couple of rough years what happened in the early 80s when Ronald Reagan came in. Big reforms were made. America went from Malaise nation to the most dynamic nation on earth. And I think we're going to do it again.
What do you think about commodities right now? Do you like them?
Commodities, you got to be very, very careful. But again, I think I would focus on something like gold, see it as an insurance policy. If you want to do commodities, realize they do go up and down, and you better be very, very careful. This is not something like buying a fund and then going to work. This is something you got to watch constantly.
Sure. Well, good luck to you, Steve. Thank you so much for coming on the program. We hope to have you back on soon.
Look forward to it. Keep fighting.